The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are.
Hello everyone, this is the Reckless Investor, or Marquise. Today we're going to review Cisco and do a stock analysis and price prediction. What is Cisco? Cisco is a company that offers collaboration products including unified communication, Cisco telepresence, conferencing, IoT, and analytical software. In addition, the company offers a variety of service and support options for its customers, including technical assistance and extended services. But let's see how the trend of Cisco has been for the past year. So from the 52-week low, Cisco has been up 7.97%, almost 8%. And this was taken on the 20th of this month. So it's taken Cisco about 62 days to reach about 8%. But however, Cisco has been on a downtrend for the past 202 days. From the 52-week high, it has been down almost 31.5%. But your average return so far is a negative 11.76%. So here we go in the financial. So we see the revenue of Cisco versus Oracle. Oracle's in red, Cisco's in blue. Cisco has kind of hovered around that $50 billion per year since 2016 to 2021. Oracle has done the same thing, but $10 billion less. From 2016 to 2021, Oracle has been hovering around that 40 billion mark. Here, I call this the twisting snake, because one year Cisco will be up, then the next year Oracle will be up. Then year or 2 years later, switch. You see the pattern. It's like two snakes wrap around each other. I call it twisted snakes. And again, the axis on the left, even though it says, for example, 30,000, it's actually in billion. So in 2016, Cisco was up about $31 billion, while Oracle just made over $29.5 billion. Then 2017, Cisco's revenue or profits went down to roughly, I want to say, 30.25 billion. And roughly Oracle's about the same. However, in 2018, Oracle was almost at $31.5 billion, while Cisco just made over 30.5 billion. Then again, here's the twisted snake. Cisco and Oracle shared a very similar path midway through 2018 and 2019, but in 2019, Cisco hit over that 32.5 billion mark, while Oracle rested at the 31.5 billion. We're gonna see in 2019 alone, Cisco gained $10 billion more in profit than Oracle. In 2020, the profit went down, but Cisco's still in charge of these two. They're sitting roughly, I want to say, 31.75 billion, while Oracle about 31.2 or 0.3 billion. But now Oracle has outdid Cisco this past year. They went over 32.5 billion, while Cisco is pushing 32 billion. But if you see from this chart, Oracle's profit actually has had more of a steadier climb than Cisco's. Cisco seems like it's all over the place. Well, hopefully Cisco can eventually retake the lead between Cisco and Oracle. So here's something new that I made. This chart shows how much of the profit is from the revenue. So you take gross profit divided by revenue, and this should be it. So roughly, Oracle's profit is roughly about 37% of the revenue, while Oracle's is about 20% of the revenue. Net income. If you ever in elementary school or pre-high school or middle school ever drew a bird, like a V with two arms, that's what it looks like for net income right now. It looks like a bird, like an old child bird. So in 2016, net income, I would say 10.5% or $1 billion was Cisco's net revenue or net income, sorry, while Oracle was sitting at roughly $9 billion. Then they both shared a spot, roughly about $9.5 billion. Then Oracle actually had a better net income in 2018, roughly almost $4 billion. While Cisco was roughly almost $500 million. But in 2019, they shot up to almost $12 billion. While Oracle kind of stayed in between $10 and $12 billion. In 2020, Oracle was sitting at $10 billion of net income. While in 2020, Cisco actually was sitting at, I want to say, about $11 billion. And again, just like the profit, Cisco comes in second last year at roughly $10.5 billion. While Oracle is pushing the $14 billion. So here is the example or the explanation what I was trying to explain on the last slide, of similar to this one, is how much of net income comes from revenue. In 2016, Cisco from 2016 to 2021, I gotta say is roughly about 75-ish, or about 77% average of their net income comes from revenue, while Oracle, is roughly about, I want to say about 75%. So it's not bad. It's very similar. It's very interesting to see these numbers. Free cash flow. Here's another twisted snake, but we can see that in 2019 to 2021, Cisco is actually beating Oracle in free cash flow. 2016 to 2018 is a big twisted snake where you don't know who was leading the charge for free cash flow between these two. From 2016 to pretty much midway point of 2017-2018, Cisco was the one leading the charge. And just in 2018 alone, Oracle had a better numbers for the free cash flow. Here's price of free cash flow. Hey, get out of here, Mr. Market. I'm always causing trouble. If you like the video so far, leave a like, leave a comment of what stock you want me to do next, and please subscribe. When you subscribe, it keeps Mr. Market out of the picture. Okay, back to what I was trying to say. So remember, price free cash flow is a multiple of sales to free cash flow. So in 2016, Cisco's numbers was roughly about 12 and a change. Oracle's was about 13 and change. Remember, price to free cash flow, you want that to be under 15 to be undervalued. 15 to 20 is fair valued, but anything above 20, let me rephrase that, 21 to 25 is overvalued but manageable, if you get what I'm saying. But however, if you're over 25, you're overvalued. There's no fixing it unless you do help your free cash flow or your price or your sales. So you can see from 2016 to 2017, Cisco was undervalued according to the price of free cash flow. And they don't really get above 16 until 2019 with Cisco. Just barely over 16. Then they don't reach 16 again until 2021 with Oracle. From 2016 to 2017, like I said, Cisco was undervalued. 2018 to 2019, Oracle was undervalued. In 2020, Cisco was undervalued again. In a sense, Cisco and Oracle undervalued from 2016 to 2021 on average. Free cash flow yield. Free cash flow is simply, can they make free cash flow? You want this above 5%. Typically you want above 1, but when I look at stocks, I want it above 5. So 2016 to 2019, it's that twisted snake again, we see. But however, in 2020, we start to see a divide between both of these companies. 2021, we're seeing a big decrease in free cash flow yield on Oracle. It shows that Oracle is beginning to lose the ability to make free cash, or they're on the decline, while in 2020 and till last year, Cisco is beginning to increase again the ability to make free cash flow. Just like there was in 2016 when they were above 18, they're pushing 8%. They're pushing 8% again in 2021 at Cisco. So hopefully Oracle can get that around or flip around where they can go on the incline again. Here's some bad news. Not for Cisco, but for Oracle. We see in 2016, moving to 2021, Oracle is gaining too much debt. Because this is debt to free cash flow. You want this to be under 5, which means that the company can pay off all their debt, that's the total debt, with their free cash flow in about 5 years' time. If they can't do that, means they have too much debt. We can see Oracle's on the incline, which they don't need to be. Maybe the last slide is correlating to this one. If we see a decline in free cash flow yield for Oracle, maybe that's why there's an incline of debt. In 2020 to 2021, they were hovering around 6. You want that under 5. They broke 5 around midway through 2019 and 2020. Actually, a little into the first quarter of 2019, and they just haven't gone back from that. While we see an incline of free cash flow yield for Cisco, and now we've seen a decline in their debt level. We can see both companies are buying back shares. While Oracle does have less shares out there, but they're buying back. These next two are going to surprise you. So 2016 to 2017, Oracle and Cisco were neck to neck. They have returned roughly about the same amount of capital back to the shareholders. But however, into the first quarter of 2017 till not just recently, Cisco has provided the greatest amount of return on invested capital, sitting at over 40%, while Oracle is still giving a good amount of return on invested capital. However, they're not growing as fast as Cisco on this ratio. So if you put money in, you're probably getting about 40% more on your capital you invested with Cisco. But however you look at the return on equity, is a different story. Just like the free cash flow yield and debt to free cash flow, return on invested capital and return on equity is two different stories. It's very similar, but it's like reverse. Cisco isn't really giving you, well, let me state this. They're both are giving you great return on equity value, but somehow Oracle has actually given you more return on equity from 2018 to 2021. They have given you almost 180% more return on equity. While since 2019 to 2021, Cisco can get over 40%. Don't get me wrong, like I said, both are giving you fantastic return. Because both return on invested capital and return on equity, you want that above 10%. 2018 was the only year was a bad year for them. Both of them. But let's find out Cisco's gut check score. So Cisco's gut check score is 11 out of 13, or of a score of 84.62. That is a great score. But what was the things that they missed? What they missed on was gross margin, initial margins, because like I said in my last video, margins are kind of hard to portray on the screen. I didn't want to do that. Their net income is down 1.4%. So it's not a lot, but still I have accounted against Cisco. But everything else is fantastic. Revenue growth is just over 1%. Profit growth is almost 3%. Profit margin is roughly 87%. Net margin is 81.93, so you can count about 81.9%. Free cash flow is 15.72%. Price to free cash flow on average right now is 14.21. That's good. Free cash flow yield 7.14%. Debt to free cash flow right now on average is 1.73. That's fantastic. They're buying back 831 shares, or roughly 831 million shares. And the return on invested capital right now is sitting at 26% roughly. And the return on equity is about 20%, not 27, 20%. But let's just go into what I think the price should be, or what I think that I need to pay for this company. So we got a really random number, I guess you could say, but the fair value of this discount cash flow model, remember I'm averaging them out, so it's not going to be this one. According to this, and according to if I plug in the analyst expectations from this full year and next year, we're sitting at $716.39. That's outrageous. How in the world do we get that big of a number? But if we look on the second one, the second discount cash flow model, I get a fair value of 40. You see the big difference between both of these models? That's why I used two, but I have a secret one that will average them out. I have Benjamin Graham's evaluation model. We both know who Benjamin Graham is, or was. Benjamin Graham is Warren Buffett's mentor, who had taught him everything he knows. Well, besides Charlie Munger. But I get a fair value of $107.47, or $107.47. So we see the EPS of Cisco is 2.85 right now. We put in a 7 for PE with no growth, a growth rate of 4%. How I got 4%, that's the average free cash flow growth of Cisco. Then we had to take a 0.05 growth rate. One would be, sorry, not fair value of 170 or 107. It's 165.34. My typo, my bad. The average bond yield is about 4.4, but according to this, when I made the evaluation model, it was at 4.07 for the current AAA bond yield. And I get a fair value of $165.34. Not 107 cents or dollars and 47 cents. That's the buy price that I should pay for. And currently the stock price is according to this video on the 20th of this month was at $44.41. That's about 73.14% difference if you plug into my acceptable buy price. But here is my final fair value number of Cisco. I value the company of Cisco, looking at all the financials and ratios, to a fair value of $378.60. Why so high? And do I agree with it? Yes. Because I am a cybersecurity student, and I do see the growth of Cisco products in everyday businesses. Cisco throughout Apple, Cisco throughout Microsoft, and their servers. They're used for the cloud and everything in IT, really, uses Cisco. I mean, yes, there are IBM machines, there's Oracle machines. Don't get me wrong, Cisco is not 100% throughout the market, but it's a good chunk of the market. But anyways, oh yeah, by the way, that's a 188.27% upside of the value of the stock now. But thank you for watching. Again, if you have any comments, please leave them down below. It will help the channel out. Please leave a like and subscribe.